It's August, and we have another real estate market update for you for the Austin area. My name's David Shapiro with my colleague Lee Abraham. We run the Shapiro Group here in Austin, Texas, a local real estate team. If you are thinking about buying or selling and you want us to talk directly about your situation, we'd be happy to do that. Our info's below. Reach out and we'll get a time scheduled to talk about your goals. What we do here on this call, though, every month is we go over the stats on what's actually happening in the market. And you can always find us back here at the realestatevideohub.com. So let's dive in with our first stat here. So we've got the active listings, and you can see they've kind of leveled off here right around, a little hard to read these, are very close numbers, but 3,200 active listings. And this is single family homes within the city of Austin. That's the majority of the people that we're working with. We do condos downtown. There's other condos throughout town that we work on all the time. So, but we feel like to keep things consistent, we like to keep it city of Austin, single family homes.
So when we're looking at that inventory, David, just the number of active listings in itself, it's hard to really, make sense of. But what we do is look at the supply and demand. So 3,200 listings. The demand from the last 30 days of pending sales has been 805 pending sales. So 3,200 properties to sell about 800 a month. You're looking at a 4-month housing inventory. The key thing here from my perspective is that compared to the closed sales over the past month, which was a little higher, 824, and more strikingly, the velocity over the past 3 months, we were averaging 901 closed sales a month. So we've seen a significant drop off on the sales activity, which is to be expected.
Me. I think I know why.
What's that?
I think I know why. I think we're going to talk about it later. I'm sure interest rates play a role in that, but
I'm sure you're right. And I can't wait till we get to that point so I can learn what you're thinking there. But the main thing just for this particular slide is we've been hovering and continue to hover at about a 4-month housing inventory, which technically is a strong market, technically a seller's market, balanced being a 6 or 6.5 month inventory, anything more than that, a buyer's market. So what we're looking at here is really the function of both the number of listings and the number of sales going down in tandem to stay steady at 4-month housing inventory. And we'll parse that out here in the next several slides.
Yeah, I'm curious to see the barometer when we get to that later and how that shows all this. So here you can see that over time. And this is August. So if we were to go back to last August, the peak, was around 5 months of inventory. So it'll be interesting to see if we get to 5 or if this stays closer to 4. Overall, good sign for the market that even though we've had a tough 4 years since mid-2022, that we might be entering, we've been pretty stable, but we're starting to enter maybe a more normal, which is a really hard term to use, but going back to something like we saw in 2019 and prior, which would be great.
Yeah, it's very interesting. So big player in the calculations is the number of sales per month. You can see it's up year over year. And actually, David, in context, it's the most number of sales going back, 5 years for the month of July?
That's great.
So it's interesting. Number of sales up over several year span. Monthly housing inventory remaining stable. New listings we'll take a look at in a second. To me, it's really talking about that pent-up demand that we've been mentioning. And here's another look at it.
Yeah. So obviously well below what the normal number of sales should be in the summer of a year like 2018, 2019, right? It almost feels like the blip here is inconsequential for the number of sales. Remember what was happening was we couldn't actually have a lot more sales because there just wasn't enough inventory back then. So even though the prices went up, the number of sales over the normal did not, but they have come down significantly. So a lot of pent up demand.
Right.
Average sale price is up year over year. And this is the second highest year that we've ever printed in the city of Austin for the month of July for an average sales price. So that's a good thing. I just saw an article talking about people that bought in 2022, and if they're selling now, they're taking losses. So, which is true. We've seen that. We've talked to people in that situation, probably even sold some of their homes. But the majority of people have equity still because they did not buy in that 6-month period.
Right. Well, we look at the median, and it's a downer. It's down year over year, month to month. We look back, and it kind of mirrors a little bit, but not exactly the pattern from the average, David. So I'm not sure if you can draw any conclusions from the median sale price.
Yeah, the same thing. Like the luxury market is selling better. That's why you can see 2021, it's still below that number, even though in the average is above that. So luxury is holding strong. We know that there's a strong wealth effect. The stock market's doing phenomenal. The people that are buying in those luxury markets probably have pretty significant stock portfolios that are doing well. They might work at some of these tech companies. Their earnings are going up. There's a lot of money flowing through the AI build out, which is basically impacting almost every sector, even parts of real estate where you're building data centers, but not residential real estate yet in Austin, Texas. So although I think, we're just absorbing some overbuilding that has happened over the last couple of years, some people that had pulled some demand we had pulled forward, people that had moved here that maybe wouldn't have otherwise moved here if it wasn't for a pandemic. So we're just trying to get back onto our normal track. And I think, we are still having lots of companies, lots of high wage earners move to Austin, especially because it's becoming more affordable over the last couple of years. Meanwhile, other cities are just continue to get more expensive because they haven't built like we have. So I think Austin is going to benefit long-term from what's going on now. Unfortunately, short-term, it's a little bit painful for some people that need to sell. And here's the average sale price over time.
Right.
Median sale price over time. I mean, this run up in 2020 to 2021, it has not reversed, right? Like this is the big jump from 2019 to 2020. That's 2021. So we're kind of just right in line with there, in the normal seasonality fluctuations.
Days to sell, and so down a little bit, which is good for the market. This is kind of an inverse indicator. When days on market are down, the market's usually up a little bit, kind of correlates to the average price being up a little bit. This dropping down, if you look over the past several years, David, in fact, I guess every year on this chart, the jump between June and July is in the upward direction. The movement is, it takes a little longer. Here, it's taking a little bit less. And so when we're looking at that monthly housing inventory staying the same, sales volume, we're looking, all these different things are kind of conspiring to me that basically saying, you know what, there really is that pent up demand. And when quality listings are hitting the market, they're selling quicker. And so I'm going to stick to my overarching forecast that we're going to talk about interest rates here in a little bit, but when they do come down, Katie, bar the door, as they say, because it's going to happen fast in today's wired up world. So I think now's the time to be a buyer and to establish your equity position. Because
and anecdotally, it feels like there's capitulation. People that are landlords, or they're just like, all right, what, I'm tired of this. And I was talking to somebody earlier today, a friend, and talking about that. You know what I think is interesting? It feels like there's a lot more stories about, oh, I got this maintenance thing in my house, and it's way more painful because people's values aren't going up. When your value is going up 3 to 5% a year, if you had $1 million home, it went up 50 grand. You're like, okay, I got a $5,000 maintenance thing, whatever. It's not as painful as when your home value is stagnant. So I think that's a lot of what's going on here is there's like this emotional disconnect that people were able to overlook before. And it feels like the bottom, the anecdotal evidence here. You got real stats. You've got days on market going down. You've got the monthly inventory leveling off at a lower number than we've seen in a couple of years.
Right.
So I think if you're thinking about selling and you have some time to wait, this might be the bottom. You might be better off just waiting till next year if you can. If you're a buyer, you probably don't want to wait. Now, Of course, both of these decisions, I always preface with, it's a lifestyle decision. And if you're a seller and you have money sitting there and you've got a better place to park that money, then maybe it is better to sell it now and put it in, you got an opportunity to invest in Anthropic or whatever you're thinking. So there's a lot of factors, and we're very used to talking these through with clients and helping them make that decision. And often the decision is, hey, it's not time to sell, right? we wait for that, or it is the time to sell. Whatever it is, we're just always looking for people's best interest. That's our job. We have a fiduciary duty to our clients, and we take that really seriously. So again, reach out if you want to chat and talk through those decisions. All right, here's days to sell over time. Obviously, you can see the boom period. I'm really glad we added this 10-year view. I think it really helps people visualize what things have done over the last decade. And
That's a
one thing
shout
I will
out.
point out,
That's just a shout out to our highly talented and hardworking production team, David.
which is Lee. So one thing I will point out, and I actually put a video up in like January of 2020, and so that was right here. If you look at these stats, like the days to sell was trending down. Inventory was trending down. We were actually going to be in I actually called it a crisis at the time, that we were going to get to crisis levels of inventory. And it was just accelerated by the Fed lowering rates and the pandemic and everything that happened. So it's kind of unfortunate, because this market could have been a darling and a growth story for another decade if this whole thing didn't happen and throw this out of whack. So it's unfortunate, the universe intervened, but I think we can get back on that trend, because we still have all the same things going for us.
Right.
Is the key.
New listings. So when we take a look, we're up just a tiny bit year over year, drop month over month to be expected. I do believe that everything we've been saying is correct regarding pent-up demand and all of that. The truth, though, to me is that I really would like to see this go up to create a higher monthly housing inventory, closer to a 5, or even just north of a 5-month housing inventory. I think it would be healthier for everybody involved, buyers and sellers, give the buyers more choices and give a little more velocity and sales volume to the market itself. All to the points that you were making earlier, David. If you're a buyer and there's a property out there that would work for you, now's the time to do it. And I think that the number of new listings being slow makes it a little more challenging for some of our buyers.
Yeah, I mean, maybe talk anecdotally about some of the situations and like why you think more supply is better.
Well, I know, for example, in one market that we're looking at, which is the Mueller area, we've been tracking that both from the listing and buy side. And it just creates, for example, the upper end in Mueller for homes that are over 3,000 square feet and maybe approaching a $2 million price point. I do believe there's strong demand for that property because the amenities that Mueller offers have become more and more attractive over time, which is basically the walkability, the proximity to downtown, but the security, appraiser would call it the homogeneous nature of the improvements to the neighborhood, where everything's kind of similar in quality and age and build out. All those things are kind of rare when put into one package. So in that particular market, the undersupply, the shortage, the dearth of those 3,000 square foot plus beautiful homes with a yard in Mueller creates an imbalance that can spike the price of a property artificially, which can benefit a seller in the short run. Like, for example, a lot of those properties are selling off market because they're so in demand that they feel, we don't even need to put it on the MLS. We want to keep the sales price undisclosed. And so I think that isn't really in the greater market's best interest. I think it's great for the seller in that case, but I would prefer to see a more balanced, efficient market where there's enough listings to go around, but at a reasonable measure so that the days on market are in that 30 to 45 days. Prices are going up, but it doesn't create that scarcity mentality that can make people do. You get into a bidding war, David, multiple offer situation. We've seen it even in the current market where a crazed buyer who has to win, and there's this time of the essence urgency, is going to maybe pay 10 to 15% over list. And if you're talking a couple $1 million property and they make a decision in the moment and then something unforeseen happens in their life and they have to turn around and sell, they can be victimized by that emotional reaction to an imbalanced supply demand. So I just kind of look at it that way, just from the human element, that it would just be better, I think, for everybody across the board if there was enough to go around, but not enough to create a glut. So that razor's edge of a balance between supply and demand, I'd rather see it sitting at 5 than 4 when it comes to the monthly housing inventory.
Yeah. Okay. That makes sense. Certainly better. And there are markets probably, if you were to do that same, we did that across the city, But if you do that in different neighborhoods, there would be
Right.
neighborhoods that have over a 5-month housing inventory.
Right.
And we do, like Lee said, a lot of this stuff is transacting before it hits the MLS, still, even in this market. So if you're a buyer and you're not working with an agent that has access to that, we actually built a proprietary tool to help our buyers get access to that stuff. So if you're in that process and you want to chat and learn more about that, please reach out. We'd be happy to chat with you. Okay, so let's take a look at the sale price to list price ratio.
So sales price, list price ratio, it's actually in line with the thesis that we've been laying down on this report. It's up a little bit year over year, which is always a good sign. Down a little bit month to month, though, David, which is contrary to the thesis that we've been going with. If that was continuing to go up, it would be a real strong indicator. But it's kind of balanced up year over year, down a little bit month to month. No real news here.
We're trying to get to this range above 98%. This is where we want to be like,
Yeah.
okay, things are back to our stable, normal, appreciating market. So
Right.
we're down below 98. So this is the target. And it feels like such small numbers. This chart, by the way, it's thrown off so much. If we were to look at it without this period in here, this chart would look so much different. But this crazy 112% thrown in there. So very, very interesting. But yeah, moving in the same direction. So the indicators are all pointing towards the same thing, what we just talked about. All right, let's look at the listing inventory barometer. So we developed this as something that we could give you more real-time stats. A lot of the stats in real estate are lagging indicators. This is the closest thing to a real-time stat that we can provide. And if you look at this 100% line, the periods where there's a little bit of gap there, that means we're selling more homes that are being listed. And the rest of these times, this means there's more new listings than there are sales. So what are we seeing here, Lee?
Well, the thing that we just flashed onto the screen now is the impact of expired and withdrawn listings. And the months that are highlighted in yellow are months where there were fewer listings at the end of the week than at the beginning of the week. If we were just looking at what's new listed in the market versus pending sales, it looked like the inventory was growing, but it's actually retracting. So it just, again, fortifies the thesis, which is that there's not enough good listings to go around and they're falling off on the expired and withdrawn. And you can see that here. So what I think is interesting, David, is let's take a look on this chart to look at the past June, July span over the past couple of years and see if it was retracting or expanding in the prior year.
June, July. So there's a big drop off always at the end of the month because a lot of listings expire there. But generally June, it's flat maybe. The year before, here's June, July. It's retracting a little bit. So it seems to be that's kind of the trend in this time of year.
Yeah. So based on the trend line that we're looking at there, kind of in balance, but a little bit disappointing to me. I would like to see more absorption being the driver between a balanced market than expires and withdrawns being the mechanism that the market balances on.
So, maybe just define absorption for everybody.
Absorption is simply the sale of property. The market is absorbing the listings. It's consuming them, purchasing active listings for sale.
Okay, so you'd prefer that's happening versus it being driven by withdrawns, which you can see is clearly the case if it's the end of a month, like here. Well, that one's not, but we saw that back here. Wow, it's a little hard to read sideways, but here you can see June 29th to July 5th. So that included June 30th, the last day of the month. That's why there's a big jump here in listings being taken off the table.
Yeah, and just from like a conceptual standpoint, the efficiency of the market is being achieved by failure to sell rather than being achieved by consummating a sale.
That makes sense.
Yeah, so that's kind of the bittersweet takeaway that I'm getting from this.
And here's the version I had alluded to before. I was curious to see this. Man, these lines are getting very close together.
Yeah.
We have that last year. Last year they seem to converge in August. There's a conversion in August. This one didn't happen until October. Here it happened in October, November. So we're a little bit ahead of the market that these are so close.
Right.
So we wouldn't expect this to happen, this early in the season.
Right. And, is that a function of the media? Is it a function of AI and people having more information more quickly? because what this is supply and demand moving in synchronicity with each other and tighter. The closer those lines are to each other is just exactly the supply and demand mirroring each other's activity. And so that's really interesting here in Austin. We've talked about the discretionary seller, people who don't have to sell if they can't get their price, they lease it out because of the low rate. It's a very interesting market that we're in, very efficient. And again, it just points to the opportunity that we have, that rates drop, demand is going to skyrocket, and can the listings keep pace? Demand is a more nimble variable than supply. It's easier typically for somebody to jump into the market as a buyer quickly than a seller getting their house ready to sell, going through the listing process and getting it on the market. So supply is usually a more lagging variable. And that is good news, for buyers that can take advantage before the prices really start to jump.
So let's talk about the rates. And here you can see we're at a 52-week high, 6.69%. And I've been doing this like the 3-year look so everybody can get a sense. Here they peaked at 7.79 for a 30-year fixed. So we're still below that, but not trending in the right direction. Here's where things were back in February. They were below 6%. So we're up significantly from there. And what's causing this? Well, the Fed has kept the federal funds rate constant. There is talk, though, that they might raise it coming up in their next meeting in September. There's the war in Iran that's causing oil prices to go up, which is, leading to higher inflation. And basically what people are worried about is that higher inflation. And then that's leading to higher bond yields because investors are demanding higher bond yields. And that's actually what's dictating this interest rate. It's generally closely pegged to the 10-year note, the 10-year treasury. So if that goes up, generally this will go up. That's kind of like an analog for it. But again, it's not like a direct. There's no direct. Right. The Fed raising the rates doesn't directly impact this, but it all funnels through the system. So there's fear of inflation, and that's causing rates to go up. And so if we can get a peace deal in Iran and make sure that inflation's coming down, then this will be less of an issue and these rates will hopefully come back down. So, I think housing cost is a big input into inflation. In Austin, obviously that's come down. That's the interesting part, right? Like you have a lot of different markets in the United States, but we're treated as one when it comes to things like this.
Mm-hmm. Yeah, we just want to stabilize this trend from a market standpoint. You get to 7, it's kind of the reverse psychology, really, putting a cold shower on the market as you start getting over that 7. So we can hover around 6.5, stability overall, get close to 6. You're going to see a spike in activity. Below 6, it's going to be a whole nother ball game. So
yeah, agreed. This is the biggest thing that could change what's going on in the market. So that's all we got for you, folks. Thank you for joining us. If you got a lot out of this, please share it with a friend, give it a like. If you have questions, comment below. We try to answer all of those, and don't hesitate to reach out if you want to talk specifically about your property or your buying situation. Remember, real estate is hyper local. So we talked about the city as a whole. We talked about Mueller, but every neighborhood is performing a little bit differently. So we'd be happy to talk to you about that. And go ahead and subscribe, and we'll see you next month. Thanks, everybody.
No comments about the correct pronunciation of Mueller. Thanks, everybody.